Excuse me. Welcome to Thursday Night Stock Charts Live. What we're going to be talking about tonight is Apple dead money? And many people aren't aware of this, but it's not just Apple that is in big trouble. It's names like Meta, Microsoft, etc., and not from the Chinese. It's from the Europeans. We're going to be talking about those names as well because they are going to be a bit of roadkill. That's why we were short going into this morning. We closed out our puts on the QQQs. Glad we did. We saw a bit of a rally off the lows. And what we're going to be doing is looking to reload to the short side on the triple Qs using a debit spread, meaning buying in the money, put option on the Qs, and selling a deeper out of the money, put option on the Qs to help finance the trade because we are bearish. We're also bearish on Meta. And I'm going to talk about that in a moment. We're going to talk about the daily chart, the intraday chart. I'm still a little bit worried. A lot of volatility in there today, but we'll talk about that trade in a moment. No trade this week on the small account. I tried earlier with Dollar General. We couldn't get a fill. So we'll try again tomorrow, either with Dollar General, hopefully on new lower lows, or on, I'm thinking Boyle. Franklin, I see you around. What are you thinking about Boyle? So that's another one. So if you're not currently a member, you want those alerts, you're trading with a small account, sign up, 14-day free trial offer, get the alerts. I post them right here. If I get filled while I'm mobile, I have a mobile app. Here's the small account channel, and here's where we post the trades. Last one was Tesla closing profitable trade. All right, so no trades in this account this week. We're looking for high probability trades. We don't want to just go willy-nilly trading that account. So only high probability trades, more to come, members on the small account. So let's go to comments. Seymour Rivers, I'm looking forward to the Sunday episode of Thursday Night. Thank you, sir. Thank you for being here. Good evening, Franklin. Always great to hear from you. Bob, what do we need to know about this market? Excellent question, and I think I will address your question. We'll talk about that quite a bit, Franklin. Thank you for that very lovely segue into today's show. Thank you for the audio check. Appreciate that. Mr. Sean, welcome. Okay, let's get to it. So, every week we talk about the yield curve. We'll talk about that later on. Not a big deal this week. We are up on the week now. We were down as of yesterday, but we're now up on the week. But no breakout yet. So I always talk about how expensive the market is, why the market should go down because of valuations, because of economic conditions. But you never really know at the bubble what's going to be the pin that pricks it. Only in 2007, 2008, you knew what the problem was going to be. That was the deadline for mortgages coming due for resets. People's mortgage payments were going to double overnight like that. But we didn't know about Bear Stearns. We didn't know about Lehman. That just came out of the blue over the course of a year. So earlier in the week, and this story actually begins several months ago when Joe Biden, probably one of the few things he ever did right in his life, banned the export of high quality, powerful chips over to China because they're going to be used in weapon systems. And I applaud him for that. When the guy does something right, okay, I'll give him acknowledgement. I think he did that the right thing. But we are at war with China. Right now, it's economic. They are selling our treasuries. That's why bond yields are one of the reasons why bond yields are moving up higher. The Japanese are selling their bonds as well. Again, another reason why bond yields are moving up higher. This is impacting our economy. We are at war. It's economic war. We're at kinetic war with the Russians already, which could easily turn into boots on the ground, American servicemen over in Ukraine. All they need to do is have a red flag event or false flag event, just like the Gulf of Tonkin incident, which got us into Vietnam. So earlier this week, we got, well, let me start with today. We'll go to earlier this week. We woke up this morning and we had this headline. Let me share my screen before I forget to. Okay, we woke up this morning and Apple is on track to wipe out $200 billion in market value in just 2 days as China cracks down on iPhones. This is huge. This is huge. This is the biggest market for Apple there is, far bigger than the United States could be. And the Chinese are beginning to shut the door on Apple. One of the reasons why is that Apple is pulling their manufacturing out of China and moving it elsewhere because of supply chain issues, because of what happened with COVID. They've been doing it for years. I said it was going to happen back in 2020 when this all hit the fan. I said, buy Vietnam, buy India, buy Indonesia. And sure enough, they're being the beneficiaries of the migration out of China. So just a little bit of a blurb about this ban on iPhones. Apple shares fell in pre-market hours in New York on another report outlining China's plan to broaden an iPhone ban for certain government departments, state-backed entities, and firms as tech war with the U.S. progressively worsens. Beijing plans to broaden iPhone restrictions. This is going to continue to a number of state-owned companies. Now we're going to companies and other government-affiliated entities, according to Bloomberg, citing sources, blah, blah, blah. Beijing intends to extend restrictions far more broadly to a plethora of state-owned enterprises and government-controlled organizations. What does this do for sentiment to Apple shareholders? Well, it certainly doesn't want you to go buying Apple products. I mean, in reality, Tim Cook has done a very, very good job as CEO, but somebody want to name for me the last gangbuster product they put out? You got to go back to Steve Jobs. I mean, what's the new product? Their services business, outstanding. They really maximized what they could do with the iPhone. But what's the difference between this iPhone and the last iPhone? Not much. Not much to go running out and get a new iPhone. So I think that Apple has an innovation problem, and they have had it for a while, but as long as they had a market that was expanding, that offset a lot of the headwinds they were facing in lieu of product. And the fact now that you have China now restricting access to their markets, whoa. So let's talk about Apple's technical analysis. So on a monthly chart, Apple is now down 5.5%, but still up big on the year. That's had a very, very good year. So it's not broken. The channel, the uptrend channel remains intact here. It is not a broken stock. The problem is that, watch out for this lower high on MACD. The problem is for Apple is that on a ratio basis, what you're looking at here is a ratio chart weekly time frame of Apple versus the triple Qs. And we do this to see, is a particular stock leading its index or lagging its index? If you want to buy it, well, you want to buy a leading stock relative to its index. If you want to short it, you want to short a stock that's lagging its index. So what's Apple doing relative to the triple Qs? I'm using the Qs as a proxy index. It's not really an index, but it's close enough. It's a composite. And relative to the Qs, we peaked out back here in October of 2022. Went into correction, rallied back, lower high. We are at the precipice of breaking down to new lower lows. In fact, I think we already have. Yeah, we have. We've broken down on a weekly time frame. One trading day left to go. A lot can happen here. But at current, this snapshot in time, Thursday evening, we have a double top and a confirmation breakdown in performance relative to the triple Qs. This is a laggard. It's lagging the triple Q names, and it's one of the biggest components of the triple Qs, which is why we have been short of the triple Qs. Apple, weekly chart relative to the S&P 500, another ratio chart, another way of viewing Apple and its relative performance. And Apple relative to the S&P 500 has been lagging ever since July of this year. You can see that it's underperforming. It's putting in lower lows and lower highs relative to the S&P 500. So where do I think Apple goes from here? I think that since I'm bearish on the market, I think that the market is going to proceed lower. And I think that with that, Apple is going to lead the way down. But is it only going to be Apple? I don't think so. I think that other big names out there are having trouble as well, because I'll bring you to this article that was published on September the 6th. What's today? The 7th, yesterday. The EU Commission on Wednesday listed six tech giants, Alphabet, Amazon, Apple, Meta, Microsoft, and ByteDance, that's a Chinese company, as gatekeepers under its new Digital Marketers Act. Basically, what this is that they want control of the browser. This is how Orwellian the EU is getting now. They want to be able, if you have a website and the government doesn't like you, they don't want to rely upon Google to make sure that nobody ever sees your website. No, they can't have that. They want control of the browser, and they want to limit the ability of the company that's doing business within the EU to be able to promote information that's harmful to the people, but in reality, it's harmful to the politicians in charge. So this is why this is happening. But net, as a capitalist, do I want to be in a business where you have the government coming after you? No. The answer is definitely no. Hell no. 3 times hell no. So we have Apple under attack in China. We have them under attack in the EU. And Meta, we are now short of Meta, very aggressively short as of today with a debit spread. And the reason is this. I'll bring you over to Thinkorswim first. We still have a strangle on Meta, meaning we sold premium calls, puts. We're closer to the money on the call side. I got a little bit worried about us being challenged on a 320 strike because they just ripped the shares of Meta this morning through the roof. And what do? They sold them and sold them hard. And they ultimately rallied them back, but they still couldn't close above $300 per share. So at the end of the day, we leaned in shorter on Meta. Now, am I overly confident that these shares are going to drop like a rock? Not necessarily. I'm not there yet. I'm confident enough to lean into the short side, though. I'm not overly short of it. I don't have a huge position short, but we are short of Meta, both using naked calls, naked puts, and we own puts outright. And the reason why I'm feeling a bit more comfortable with the trade is that at the end of business, where is my chart of Meta? Here it is, right, looking right at it. We broke down today. You could see that we were in a very tight wedge formation. I thought this was going to get resolved to the upside, which is, again, I was nervous about going into the new trading day today. And ultimately today, they broke Meta down below support, and they did so on volume. So we're going to be looking to lean into this trade if and when we get confirmation that we are going to move lower on Meta shares. Microsoft, another name listed in this EU article. We have a position here. We have a strangle, long dated puts and calls. We sold premium there. And you could see that 2 back-to-back down days. We are back down below the 50-day moving average. We're still holding a breakout here, but these shares are now under pressure. And if you look what they did intraday, they did exactly to Microsoft as what they did to Meta. They got everybody all excited. They got the dumb money off the bench, rallied the shares early on. What did they do? They dumped them. Whoops. They sold them off. So beware of the bright green futures. Not that today was bright green futures day, but beware. If they go positive, wait to the end of business before you're opening up any trades, long or short. Wait till you see how the day settles out. A lot of propaganda, well, I shouldn't say propaganda, a lot of shenanigans going on here with funds trying to goose the market up higher. And what are they doing? They're selling strength. So this is what you're seeing on these names. Meta, they rallied it, sold strength. Microsoft rallied it, sold strength to close at the lows of the day. Beware here, folks. Let's go to comments. Hello, Jody. Welcome. Mark, welcome. Happy Thursday to you, my friend. Also, New York is restricting TikTok, so they are mad shorted today, but wasn't great. Buyers came in, okay? Mr. Pete, welcome. Pete, Dollar Tree and DG are still falling. Are they telling us something? Yeah, retail's dead. You know, if you have a retailer that's in the low end, I mean the very low end of the spectrum of retailers that are servicing the lowest in the economic spectrum, you have a major problem. You know, I do okay for myself. I shop at Dollar General all the time. I'm telling you right now, I'm never going to spend $5 on a birthday card at Walgreens or CVS when I can go to Dollar General and pay, Dollar Tree, I'm sorry, not Dollar General, and pay $1.25. That's where I shop, Dollar Tree. Okay, so yeah, we like those trades. They're extreme oversold trades. We'll talk about those on chart request, DLTR, DG. Okay, what else do we have here? I read this article today, and it really struck home. We are living in neo-feudal bubble. There is no doubt about this. I love this title. And I'm just back from Italy, so I can relate to this graphic here. So basically, what I want to point to, you don't need to worry about the verbiage. All you need to do is focus on the charts. And the inequality in the United States, and I am no liberal. I am no liberal whatsoever. I do believe, though, because I grew up on welfare, I do believe in a social safety net for those that need it. But there needs to be means testing. You need to get off of it. You need to get a helping hand off of it. I'm a firm believer in it. So I am not a hardcore capitalist. I'm not a hardcore conservative. I believe that the United States should offer a social safety net for those that are in dire need for a limited period of time. I also believe that while I believe in a meritocracy where people should be rewarded for their efforts, if you're not going to wake up at 4 o'clock in the morning, you're not going to pump hard, work hard, and you expect to be compensated for the same type of work that a guy that gets up at 4 a.m. or gal and they work their butt off. I mean, that's crazy. You need a meritocracy. You need that to foster innovation. The left in this country wants to destroy innovation, but they forget one thing. The only reason why they live the life that they live is because of innovation. If we didn't have innovation, we would be China. And for whatever reason, they're in love with that model. I digress. Now, in this country, we have the haves and the have-nots, and that's okay. Every country is always going to have that. But you cannot have a concentration of wealth so great that it squeezes everybody else out. And this graph here, I hope I could, yeah, I can blow this up. Let me see if I could. Okay, so this is not to insinuate that because we're at these highs, we should see a bubble pop. That's not what this chart is. What it's telling you, or what it's sharing with you, is that after each event, 1990, that's the S&L crisis, back here, 2000, dot-com bust. We always talk about this stuff. It's the same story over and over again. Great financial crisis, COVID crash. What's the common theme amongst all of these events, besides the fact that the yield curve was steepening? Not talking about that right now. What's the other common theme? The other common theme behind every single one of these events is that you had Federal Reserve intervention, government bailouts. Federal Reserve intervention and government bailouts. Who benefited? Who ultimately benefited? Top 1% of total net worth soars to new highs in every Fed credit asset bubble. This is the 1% in blue. Now, do I blame them? Well, if they help contribute to the event that caused the Federal Reserve to have to enter the markets, or the government to have to enter the markets, yes, I do hold them accountable. But nobody else holds them accountable. I don't blame them for taking advantage of a situation that they were liquid during and took advantage of. So am I going to blame Michael Burry for making $1 billion off of the great financial crisis? No, he saw an opportunity and he capitalized on it. That's capitalism. But what this chart I'm trying to drive home, I guess, is two things. One, I was here. I was short here and I was liquid here. And I took advantage of this event. Not $1 million event by any stretch of the imagination. It's not a brag. It's just a contrast to where I was back here in 2000. I was long. I was selling puts on the highest beta stocks you could possibly imagine. I had no clue about the hell I was walking into, but I was pumping out. I was printing cash through the late 90s. And then it all came to an end. So I knew from this event here, and right here I began the Contrarian Trader 2005. I knew that the game was rigged. I knew it was rigged because a lot of the people that I was listening to and watching on CNBC, they were all going to jail. Henry Blodgett, who now is a principal, I believe, at Business Insider, he was banned from the securities industry because he was telling his customers to go buy these. I forget what phrase he put on the quality of these stocks, but it was not good. And he was bragging to his friends about offering up these stocks. And I saw the game. I'm a very quick learner to know the grift. Just like COVID, I knew from the very second it occurred, I saw the grift. After I took my losses in 2000, 2001, I saw the grift. And I said, never again will I rely upon these people. Never, ever again. And that's why here, 2005, I began the Contrarian Trader. And we were short here because the handwriting was on the wall. The home builders were going up like a rocket ship, yet their earnings were going down like this. And KB Homes had sold their business, their home lending unit to Countrywide Mortgage, no longer around. At that time, they were the largest issuer of mortgages in the country. And I said, what is KB Homes worried about? And sure enough, we found out soon thereafter. So we began shorting the home builders, and we did very well on that short. And we were liquid near the bottom, not exactly at the bottom, where we took advantage of the rally up. So here we are yet again. And this next time around, when the Federal Reserve does step in, when the government does step in and guaranteed, assured, made green little apples, they're going to step in and they're going to benefit. Even if they were the villain causing the problem, they are going to benefit because they always do. They have the power. They have the PAC money. You don't. I don't. So the question is this, and I'll challenge you. One question. Are you liquid? Are you on margin? When you woke up this morning and you saw the futures down 1%, were you thinking about lightening up on margin? When we closed this afternoon off the lows of the session, were you thinking about, thank God, I dodged a bullet there. I think we're going to rally back. I'm not going to lighten up here. I'm not going to listen to the clues that the market is sending me. If you're not going to pay attention to the clues that the market is sending you, then you stand to be illiquid down here rather than liquid. And that's how the 1% play the game, folks. Get ready. It's going to happen. It may not be this week, may not be this month, but it's going to happen. And again, I'll ask you the question, are you liquid? Are you ready? Do you have insurance? When I woke up this morning, I was clicking my heels. I had 32 contracts of QQQ options. It was a great morning. It was a great day yesterday. It was a great week. That's not bragging, and kind of it is. But I'm trying to illustrate that we projected it. The market is sending us signals. We'll talk about the weekly charts in a moment. Let's move on. So really quick, through the bank's usage of Fed's emergency funds. You thought this is over in March. It's not. Every week I talk about this. This just goes higher. So the regional bank crisis, it's still there. You just don't hear about it. The Federal Reserve right now is lending them. They're on a lifeline. They're on a lifeline right now. So this is the chart of the Federal Reserve ICI Money Markets Funds Index. They keep going to the Federal Reserve saying, I need help. Here are my treasuries. Can I have money? Sure. That's our banking system. And what's the Federal Reserve doing? Not that I think that they're wrong with reducing their balance sheet, but this is updated as of yesterday. And the Federal Reserve's balance sheet, this is equivalent to a rate hike. They are reducing the debt. They're putting more treasuries on the market. So if you're wondering, hey, why are yields going up? Yet they're telling me that inflation's coming down. Why are yields going up? The reason is that the Federal Reserve is dumping supply on the market along with Japan and China. So you have a lot of supply hitting the markets and they're demanding more yield. It's just simply the bond market saying, you got to pay up. You're too much of a risk. What else is out there that is causing concern in this market? West Texas Intermediate crude 10-month highs as total crude stock hits 1985 lows. Thank you, Joe Biden. Thank you very much for helping the Saudis and the Russians to put our neck in a noose. And we're going to jump off the platform ourselves because he just took another couple of million acres of federal land off of the list of lands that could be drilled on. Thank you, Joe Biden. And what's happening with West Texas Intermediate crude? Let's make sure this is updated. On the week this week, it's up 1.5%, and it's breaking out. This morning, initial jobless claims plunged to 7-month lows thanks to Ohio's fraud cleanup. So that's a good thing. Initial jobless claims dropped. I'm surprised we didn't see a spike in yields today. They actually closed down on the day. Fed funds futures. What's the expectation of a rate hike? This is from the CME. We know September there's not going to be a rate hike. November, let's update this. This changes quite often. November, we're back at around 50-50, folks. Technically, we are now have odds favoring a rate hike in November. This was not this way a couple of hours ago. And as of yesterday, this is a pretty big move. You know, 1 day ago, no change was at 52.9. And 1 week ago, it was at 58.9. 1 month ago, it was at 68.5. Now we're at 48.3. So when you're looking at Apple, the Qs, they're rolling over and you are thinking about the whys, look no further than this tool here. Yields are probably going up. Let's take a look at the weekly charts and how we are poised to close out the week. First, let me take a sip of water and go to comments if there are any. Jody, China is mad. Oh, yeah. I was wondering what you mentioned earlier about TikTok. So they are mad. Yeah, I got you. Now I understand. Thank you for the clarification. So yeah, what Jody's referring to is that this began under Trump. So this is not just a Biden thing. And I don't think that Trump was wrong. I don't think that Biden's wrong. I think that China is our enemy. The CCP is a criminal organization, and they are our enemy. So I'm not going to blast Biden just for the sake that I don't like him. I don't like his policies. I think he's a horrible human being. Always have, way before he was a presidential candidate. I have been paying attention to politics for a very long time. And Joe Biden has always been the nastiest SOB when I saw him on the shows. And it always just struck me as just a real nasty SOB. Does it shock me that he's a criminal? No, not at all. You bet, Pete. Is gold a good buy now? No. We'll talk about gold in a moment, because when you talk about gold, you need to talk about the US dollar. And we need to say, okay, is the dollar in an uptrend or is the dollar in a downtrend? And therein lies the answer to your question. So we'll talk about that in a moment, Seymour Rivers. So we'll get to it, okay? You're doing a good job. Sean, 10%. Yeah, right. 10% for the big guy. Incredible. All right. Let's get to the weekly charts. So we're nearing the end of the quarter, and I think it's beneficial to begin with a quarterly chart. And we are here. This is the downtrend channel. We are threatening a breakout, folks, on a quarterly time frame. Once this gets going, a breakout in the quarterly time frame, it generally gets pretty ugly. So anything can happen. We still have a few weeks left to go here. Anything can happen. So beware. Quarterly yield curve breaking out on a weekly view. We are now up on the week by 2 basis points. No breakout yet, but we are very, very close to a breakout on the yield curve weekly time frame. So once we start putting in higher highs, the prior high, negative spot 66. Where do we close? Negative spot 67. So once we close at spot 65 or lower, that means that we are seeing a steepening of the yield curve. That means there's a normalization of yields. There's something wrong in the economy. And at some point in time, the Federal Reserve is going to have to step in and fix it. And that does not mean that stocks go up. Look at any chart where the Federal Reserve started cutting rates and stocks go down. As recently as COVID, it's a matter of equilibrium, meaning yields get to a certain rate. The federal government is in there spending money, and all of a sudden the economic data begins to point to less worse situation, and you begin to rally on good news. We are nowhere near that yet. That is months, if not years away. And if you aren't sufficiently depressed by now during the show, we are now 36 minutes into the show. I'll stay after and I'll get you even more depressed if you have the time. So let's move on. 10-year yield. We have a breakout. We broke out a few weeks ago. We're consolidating. Guys like Carter Worth, who I'm a fan of his. I think he does good work. He's saying that we're not going up higher. I think we're going up higher. I think we're breaking out. So I think that most certainly we are breaking out on the 10-year yield, on the 30-year yield. And that will bring the steepening of the yield curve into where I believe it's going to go. And that is a very, very rapid steepening, bringing equities down lower. bond prices, 20-year bond price. We're off the lows of the week, still down on the week. But the TLT on the day looks like it may be putting in a higher low here. So we'll see how we close out the week on yields. If we get a rally on the TLT, that probably means we'll get weakness on the 10-year bond yield. Tips, Treasury inflation protected securities, firming up here. So, Seymour, you were asking earlier about gold. Well, if you get the tip market out there worried about inflation, that's beneficial to gold. And the tip market this week, actually for the past 3 weeks, has been saying, you know what, let's firm prices up here, a little bit of demand, a little bit of buying here. We don't believe that the Federal Reserve has got this right, and that ultimately they're going to have to step in. They're going to have to begin to bail out the equity markets ahead of a presidential election season. Inflation is going to go ripping through the ceiling. And let's buckle up. Let's buy some tips, Treasury inflation protected securities. But to get gold ripping up higher, you must have a dollar break. And on the week, the dollar is nowhere near breaking. Let's update this. Now, as I'm drawing this, I will say this. I am very, very surprised that gold is not being far more bearish in trade as the dollar is up so aggressively. And that includes the gold mining stocks, even though they were down today. The gold mining stocks holding up fairly well relative to prior years. I mean, this year healed. They just got annihilated. They were destroyed in 22. Daily chart. We're up 0.20%. This goes higher. This wants to go up higher. I mean, I'll bet dollar volume is very light. Let's go to the UUP. It's been very light. Yeah. So there's not a lot of volume holding up the dollar. And I think that if the dollar breaks, it's going to break very, very hard, similar to back here in June the 1st, actually. So when it goes, it's going to go very, very rapidly. Now, to identify or front run the dollar, you need to take a look at the euro and yen. So the euro is a basket case. They're trading at the low of the week here. Daily view. Are we at support? We do have some support where we closed. And let me illustrate that. So you could see we had support where we closed today back here. It was resistance here. It was support here, resistance here. So this support level where we closed today has a lot of history. So let's see how we close out the week. Maybe we bounce tomorrow on the dollar and we close out the week strong on the euro. It's possible. It's improbable, but it's possible. Closing out the week strong. It's not improbable that we rally tomorrow. Yen. Setting up for a doji star formation here. That's a sign of indecision. Very, very tight wedge formation. Usually this will get resolved in the opposite direction of where it's going, directionally at current, and that would be to the upside. Doesn't mean you can't break it and have a capitulation sell-off, but then you get a reversion to the mean, and then you begin to break out. VIX, weekly view. Can you believe the VIX is only up 10%? Sounds like a lot. It's not. It's not a lot. We can't close above. What did we close? Where did we close today? We closed at 14 spot 4. We can't close above 15. That's bananas. So we may get a rally tomorrow. Daily chart. Yeah, the VIX index closed down today along with equities. But the VIX contract for, look at this. Oh, that's Microsoft rallying after hours. What's Meta doing? Good. Still down below 300. What are the NQ doing here? NQ's flat. All right. So we don't care about Microsoft. We're fine there. VIX. So you can see the September contract closed up today, but closed well off the highs of the session. So I think there's a very good chance that we rally tomorrow in the markets as we pull back to try to put in a higher low on vol. Dow Transports. This is the canary in the coal mine for the equity markets. It is breaking down and breaking down hard. Down over 3.25%, over 3.33% on the week daily view. Down another 0.5% today on volume. Dow Jones weekly chart down week, nearly a percentage point, down volume light. SPY weekly view down 1.41%. It's not a broken chart. My mouse is being wonky here. Let's go to a daily view. We closed below 445. Volume was light. Let's check out the 30-minute view. The reason why we do this, we want to get a feel for how we closed out the day. They rallied it back, obviously, off the lows. Not a great close. Momentum is still building here. Big volume to the downside into the close. Qs, weekly view. They're in trouble. They're in trouble. If they close down below 374, you could say 374.25. When they close down below 374, Qs are in big trouble. Big trouble, because what that'll mean is that this breakout from last week has been negated, and you have a probable double top. And then what you'd be looking for is support to hold at 354.71. If it does not hold, things get real quick. Daily view. We broke 374 today. They fought like hell to hold that yesterday, and they did, but they gapped it down today. Volume, heavy, 30-minute chart. I think they're going to gap this down. I think they filled the gap, and they may break this lower. If they don't break it lower tomorrow, I would be shorting into this declining 50-period moving average on the bet that they don't close it above 374, 374.25. Now, if they do close it out above that mark on the week, I'm going to exit that short position because they're probably going to rally it next week. But if they close it, and especially if they break it down to the lows of the week, we'll be leaning into that short moving into next week. The banks, an inside week, not much happening here, very light volume, not much to talk about. Let's take a look at the KRE. This is the regional bank ETF. That's down over 5 3/4 on the week. This is going lower. Light volume. Let's go to the daily chart. Not good. Lower high, lower lows. Regional banks are in trouble. Semis. No new weekly breakout. Possible bear flag setup here. Daily view. They gapped it down today on volume. Now, Intel was really strong today. Very strong. But NVIDIA, horrible day. Down nearly 1.75%. But they may rally this. LABU, I haven't been paying attention to this at all. It broke out last week, may give it up this week. Staples, continuation breakdown. Consumer discretionaries, they were up today. They're struggling with resistance. This could be a short if the market breaks. What a day. I can't believe they did this. That's a beautiful candlestick. That's a bullish key reversal bar. Folks, if you're not familiar with the terminology, 5-part video tutorial, my top 5 favorite candlestick patterns. I don't think I linked to it down below tonight. I forgot. Where is it? Here it is. Let me just do this. I'll edit in real time. You'll be amazed at my skills. All right, all those links, 30-minute chart club, my 5-part video tutorial, my top 5 favorite candlestick patterns, link below, free. All right, so discretionary is looking good here. Emerging markets, avoid. Dollar strong, emerging markets weak, avoid. Energy. Wow, it's giving up some gains on the week. But an up week, daily view. They were down today. A little bit of topping action. We may get a pullback here on energy. All right, let's skip to gold. Well, gasoline prices, they're down on the week. Gold. I can't buy this. It's a weekly chart. We are poised to take out the weeks from the week of last. Hold on, 1 minute. Excuse me. We are poised to possibly take out the lows of last week. So we can't buy this, not yet. And let's take a look at the daily chart. Not a horrible day, just barely holding on to 1940. So I'm not ready to go buying this yet. Let's take a look at where we stand on a monthly time frame. I mean, what do you do here? And what I meant earlier about it's impressive how gold is held up. We're in a consolidation. It's not as if gold is breaking down to new lower lows. It's not. Even though the dollar is going like this, gold is just doing this. So I have to say that's impressive to me. And the fact that it's not responding so negatively, it's down, yes, 1%, a little bit more than that on the month. The fact that it's not breaking support levels as the dollar is breaking out tells me there's an underlying bid in gold, and they know that the dollar's days are numbered, and therefore you better be long of gold. Now, silver, that's one that really got killed this week. We should be watching. Let's take a look at silver on the week. This is the AGQ, this leveraged ETF, down 10.33%. I think we're going to be buyers here down at these levels, but not quite yet. All right, let's do some chart requests, and let's call it a night. Okay. So my thoughts on Airbnb. Yesterday, I read that New York, basically New York City, is, for all intents and purposes, bowed to the hotels, and they've banned Airbnb. It's not an outright ban, but you look at the terms of how you're going to need to run an Airbnb in Manhattan or in the five boroughs, you're out of business. You're screwed. So um, that being said, you would expect to see a sharp drop in Airbnb on the news. And yesterday, it did close down, I believe. This is a weekly chart, but this is a strong chart because on the day today, we closed up. Not only up, but it's a outside reversal bar, aka a bullish engulfing. One of my top 5 favorite candlestick patterns linked below. So this appears to want to go up higher. Bad news be damned. When you get news like that coming out of Manhattan or New York City that they're banning Airbnbs, yet the stock price just goes, there's an underlying bid there. So I think this could go up higher. It's a very strong stock. So let's take a look at a monthly chart here. I think this is looking to break out. We are very close to a monthly breakout on Airbnb. So that's my take on Airbnb. VFS, average down to get out, cut losses. We don't want to cut averaging down is not something I'm against, but it has to be for the right reasons. If you're at extreme oversold levels and you're nearing historical support, then I'm all for averaging down. I don't know what this company does. There's not much data here at all. This looks like, honestly, I don't know the news on this. I don't want to be judge and jury here, but it looks like a pump and dump. What I would do here is I would do this. I would say, okay, if this, then that. If there's a, I don't know the news behind this stock. Right? Maybe it's a good story for all I know. But if there is no good news out there on this company, I would have to say you need to identify where you have support. And that support level is at 17.93. That's where you have a volume shelf right here. And if that fails to hold, I would get out because the market's saying it's giving up all this real estate. And if you break out further and you close above this volume shelf here at 1801, I would move my stop up from 17.93 up to 1801, and I would keep doing that. Closes above 1810, raise that stop. Just keep raising it up. That's how I would play it. Actually, what am I doing? This is not a daily chart. I was wondering why it was so fractional. Sorry about that. I thought I was looking at the daily chart. Sorry. Let's get rid of all this. All right, so what happened here today is that where it found support is where it closed here on August the 21st. I would not add more here. I would not add more here. This is not a stock that's deeply oversold. I'm not seeing a reason as to why I would want to commit more dollars to a bad trade. If you're down on the trade uh, and so down, you're not. I don't even want to ask you basis cost. Uh, I would not commit new money to this trade. Not yet. I would need to see a breakout. I would need to validate that there's news that this stock is going up for a reason and not a pump and dump. But long story short, my ultimate stop loss order would be put in if on a close below 1590. Closes below 1590, I would be out. But I would not commit more funds to this trade. See how we close out the day? You have some support below. So you may have a bottom here. But depending upon the story, depending upon the news that sent the stock up higher, if it's a flash in the pan rally, you may want to sell any counter trend rally here and stop trading these names. Stop these bad names. Try to stick with the S&P 500 and the high quality mid caps. Back to TZ really quick. No, I would not short Airbnb. Now with the quality of the price action relative to the news. It rallied on good news. What about Dish, which made $2.07, which co-founder has bought from $66 to $20? Dish. It's hanging on by a very, very thin thread. If this breaks support at, where do we close today? Where's the last here? $6.01. We closed down below $5.95 out because it's going a lot lower. Weekly chart, you do have support down here at 525. I would just bail on this on a break below support at that 595 level. Look to re-enter down here if you're going to be dead set on holding the stock. The one thing I will say is that RSI is flattening out along with price action, so it is holding support. Would I go buying? No. This is what screwed me up. Why is the minute chart here who's saved as a favorite? That's why I did that. Daily should be a favorite. Now, all is right with the world. All right, daily view. Nothing to do here. At the lower end of a trading range, if we break support, I would get out of this. If you break out above, let's call it the 21 period moving average, $6.55, or even better, resistance up at $6.72, look to add more there. I would not be a buyer here. Let me check in with the members area. 2 seconds, folks. Okay. Do we have requests here? Dominic puts a request in for Bob. Oh, I know what he did. Donnie. All right, Donnie. XAUMF, gold money. We own this. I'm holding it. I think this is a good looking chart. Hell, I may buy more. Look at the higher low. Donnie, look at this. It's consolidating. I would hold on to it. because this is highly correlated with gold. I would hold on to, me personally, I'm holding on to it. And if we get a breakout on this monthly chart, we close above $7.10, adding more. But the dollar needs to have broken. What else do we have here? Dish. All right. I think that's it. Oh, DG, we're going to go over. DG. Dollar General. We're trying to put on a trade here in the small account. We have support at around 120 on a historical basis. But I'm probably going to be selling the 110 puts and some calls as well against it. Also support at 116. I tried to put a trade on today. They would not let me. They wouldn't take my offer. So I'm going to try to do it again tomorrow. And we're going to put on a position DG and or Boyle. Natural gas. Weekly view. Consolidating nicely. So we're going to sell a strangle in here in the small account. Maybe even the large account as well. Folks, that's it. Have a great night. Thanks for being here. Like, subscribe. You know the deal. And I will talk to members tomorrow. If you're not currently a member, you want the alerts for our trades, please, 14-day free trial offer below. And talk to you members tomorrow. Talk to you folks on Sunday Night Futures Live. Hit that notification bell to get notified. And don't forget my 5-part video tutorial, five top favorites, candlestick patterns, link below. Ciao. Talk to you soon.